Hey guys, Dan from Trading with Dan here. Hope we're all well. I've had a little play around with the settings on the DMT indicator and also in my 3Commas bot settings. So what I'm gonna do is we're gonna do a good old-fashioned back test just to see how we'll be getting on. I know TradingView does have a back test, but because of how I was using our trailing profits and our trailing stops with the bot, you kind of have to do it manually, so you can work what those are out based on what the price action was. So I've got my little notepad here ready to type them on, and then so we'll go back and see what happened trade wise. So first off, we're going to go to so I've got a bit of a cold today, guys. Sorry about that. So first off, we're going to just check what our 3Commas bot settings are, just so we're clear. We've got we don't need to worry about the order size. It's the take profit target is 2%. The trailing deviation on the take profit is 1.5%. So we've obviously got the trailing on. Our stop loss is 2%, and our stop loss and we have our trailing stop loss on. So we have 2% stop loss with a trailing stop loss, a take profit target of 2%, and a trailing deviation of 1.5%. And then if you did see my previous video earlier today, I did explain how the correct way of how the target profit works with the trailing deviation. So back over to TradingView. The settings that we've actually got, you can see on the screen, are our stop is 2% and our take profit is 4%. So that's a 2-to-1 risk to reward ratio. And then just quickly looking back, we've got a buy profit, a sell stop, and then we've got a buy profit, a sell profit, a buy profit, a sell stop, a buy profit, a sell, and that will be a stop, a buy profit, and we have that chop zone. Then we have a buy profit and a sell, and then we'll get stopped out of that sell somewhere, not at the actual 2% stop. We'll get stopped out of the buy line. Buy, then we would have got stopped to sell, and then we would have got out of this sell around break even. Buy profit, a little bit of a chop zone again. So buy profit, sell profit. So I've looked back at this already, and just that alone is profitable, because obviously the profits are double what your losses are. But we're going to work out exactly with the settings that we've got using the bot, so to see how we get on. So our first trade here, we have to buy. I've changed my settings to actually open on the close of the candle, so we don't get caught on some of these fake outs. So it's only when the candle closes above or below our DMT line that we will enter the trade. So if we work out what we've got from here, we've got our entry is the white line, our stop is the red line, the red dotted line. So we go up from here to, there's our 2%, which is our profit target. So as of this point here, we are have a trading stop of 1.5%. So as long as we don't retrace 1.5%, we'll still be following this market back up. So we get to 4% profit, which is what I put as a profit on here on TradingView. So that's not necessarily the profit we've got in the bot. So we reached the 4%. So now we just need to check from the top of this candle, just check that we don't come down more than 1.5%. So we're here. Oh, it's fiddly, this measuring tool. So so the bottom is here, the top is there. So that's less than 1.5%. So we're still in the trade. Is this just here? Is this bottom here to here? 1.5%. Actually, let's just measure that exactly. So to see where it would have got us. Yeah, it is under 1.5%, so we actually wouldn't have got stopped out there. This one will have to be 1.5% here. So what I would assume now is that we're getting stopped out 1.5% down from the top of this candle. So if you work out where that is, 1.5% down is about there. So it's actually just the top of the profit. So literally that is pretty much the 4% trade. Well, in the trade longer, we're giving it the chance, but this wick up with our trading profit would have wicked us out of the trade for pretty much exactly 4%. So our first one is 4%. So our second trade, our sell that we had here, we would have sold. So remember, we've got the trading stop. So we've got the trading stop. So if I measure from the sell line, how big this is down here, this is basically 0.8. So our trading stop would have moved down by 0.8. So when we would have hit that stop, we would have lost basically 2%, take away 0.8, so 1.4%. So we put in a minus 1.4% here. So on to the next trade. The next trade, we had a buy here, then profit there. So I can pretty much say for certain now that this retrace here is more than the 1.5%. Yeah, that's a quite a big retrace. That is a 2.7% move. So what we'll do is we'll measure from our entry. Our entry to the top is 3.79. So then if we take our 1.5 away from that, that is, if you say it's 3.8, we take the 1.5 away, that puts us on 1.3. Sorry, 2.3. So that's a 2.3% profit. 2.3. Right, to our next trade. Our next trade was a sell here at this white line. So we do get to the, I think we get wicked out quite early on this trade. We get to the 2% profit here. 2.9%, but then we are gonna get taken out on this retrace because it's more than 1.5%. So that's 2.9%. Take away 1.5, which will give us 1.4% profit for this trade. This is obviously this is with our 3Commas settings for the trading profit. I mean, if we had just left the trade, we would have got the 4% profit, but it's just how I think it is better doing it this way, locking in the profits, and not necessarily letting the trade fully reverse on you. So we've got a buy here at the white line. A buy at the white line. Do we hit the 2% here? Oh, we just don't hit 2%, which is actually good for our trade, because it means that means we come back down here and we don't hit our 2% stop, and then we have this big run up here. So we've got from here to, this measuring tool again. Right, so measuring tool from here to here. We have a 5.26% profit, and we'll obviously retrace more than 1.5%. So say we've got a 5.25% profit, so 1.5 of that will be 3.75. So that's a 3.75% profit. We have a sell here and a stop loss here. I mean, we do come a bit on side here, so we will lose a little bit less than our stop will move. That's 0.5%. So our stop will be, this stop would have moved down by 0.5, so we'll be a negative 1.5 loss hitting the stop. So the buy here, this buy here, does this go up to 2%? Nope, that's not 2%, so we don't need to worry about that wick there. So we are going to go on to the next one, which will be from here then, so not the next trade, sorry, but just the next part of this move. From here, from the buy line up to the top of here is 6.73%, and then I'm guessing that will be more than a 1.5%. It will be more than 1.5% at some point on this retracement. So well, we'll say 6.75%, take away 1.5, puts us on 5.25%. So that's a 5.25% profit. Yep, so we have a sell here and a stop out. Well, we can either have the stop out or we can set the order so that it gets us out once we get the buy, but the buy and the stop out here, they're pretty much the same level. So we are going to get the 2% stop out minus this movement down here that will come off our trailing stops, which is 0.8, so that'll be a 0.2 loss, 0.12 loss, sorry, hey, 1.2 loss, 1.2% loss. Right, so the next trade, buy here and profit there. So this is a pretty big wick up straight to 4%, and then that's more than 1.5, so 4 take away 1.5 will be a 2.5% gain. So this is obviously a bit annoying that this will be 1.5% of a move. Yeah, you can see 1.9 is more than 1.5 because we then obviously carried on going up, but that's just, it is what it is. So then we have a sell here. This sell goes down to here. Not these aren't one, so it will go down to here, and then which is 3.87. So we'll just say 3.9. Take away the 1.5 trailing stop. So that gives us a 2.4% gain. So here we have a buy, which we then will, I mean, in theory, we can set the order to get us out of this sell line, or we can wait to the stop. So we're assuming we're not having that sell to get us out of the stop. We'll just work on that basis and say that this one is a 2% loss, because we literally just end up, this candle closes just above, and then puts us into the buy, and then yep. So that's our, but that is actually our first 2% loss. Then we have a sell here, which then, I mean, we never do hit this top line 2% loss actually. So whilst obviously we turn into a buy, we don't actually lose. So, I mean, it's hard to say what we're doing that trade, because we would get out when it turns into a buy, but then we were assuming we're not doing that, so we then still would be in a sell. So we'll leave that one. It's not going to be a negative trade, but sorry, that was my -2, wasn't it? Right, so then we have a buy here, and then let's just assume we get out of the sell line again. Sell line, yep, so a 0.5 loss. Yeah, I'm just keeping track of these on here, guys. And then we have a sell here and a buy, so we'll work out what that distance is again. That is a 1%. And then we have a buy here, and then a sell pretty much at our stop, so that is a -2. So that area chart, we did go through a few losses, which obviously wasn't ideal. This sell here obviously would have been a profit at some point, so we got down to, well, say we got down to our 2.18%, 2.18, yep, 2.1, and then we didn't, that would have retraced us back, so that would have taken us out. So that would have put us on, say we've got a 2.1% gain minus a 1.5 puts us on a 0.6 gain. Right, so we've got a buy here and a profit. Yeah, none of this may be more than, is this more than, yeah, ooh, it's close again, it's not quite 1.5. So I think in this trade we are looking at, from the buy line, we don't get more than a 1.5 retracement, because these aren't bigger than that, and then we get up to here, and this will be a 1.5 retracement. So the measuring tool from the buy line, here up to the profit was 4.4, call it 4, take away 1.5, so puts us on 2.5 profit. We have a sell here, a sell which doesn't hit our stop, comes down to here. We then obviously do get out of the trade, so this sell down to here is 1.4. So we are gonna, well, we still actually don't hit the stop on the 2% stop, but we will hit a trailing stop, which will be 0.5%. So that'll be a negative 0.5%. We then get a buy here. Yep, so we go up to 3.15%. So 3.15% take away 1.5 is 1.65. So that's a 1.65% profit. We have a sell at this line here. We don't hit the stop. We come on. I mean, this is again is one of those ones where we turn to a buy. So literally this distance here will be our loss. So 0.5 roughly. It's just under, but we'll say 0.5. We have a buy here. It goes up. It does hit our stop. But we have got to minus this from the 2%. Minus, say, call it 0.5. So we'll have a minus 0.15. Sorry, a minus 1.5. We have a sell here, which will turn into a profit. Turns into a 2.3 there. So say 2.4, take away the 1.5. 2.4 take away the 1.5 equals 2.4 take is 0.9. We've got a good trade here. We've got the buy. The buy here. Let me just check where we go from this wick here, because this looks like it could be more than 1.5%. Oh, it is. Oh, so this is unfortunate, really, but this is one of the things that will happen. You can never tailor everything to every move. So yeah, so we do get up to the 2% gain. Sadly, this does keep going up, but this wick just here just obviously retraces us out, which is unfortunate. So we get from a 2.25. So we only get a 0.75 gain from this one. This is obviously with that strategy. So yeah, we've got a few buys and sell chop zone, a few buy profits and sell profits there, but we just that's enough of a back test. We've got varying different sort of market conditions here. We've got more movement, we've got big movement, we've got chop zone. So I think that is quite representative of the previous trades. So if I quickly work out what that works out as in total, it works out as, just bear with me a second guys whilst I calculate this. I could have done this in Excel and it would have just been done straight away for me. Nearly done, guys. Yeah, so we've got to just under 17%, 17% profit overall from all the positives, all the positive percentages minus all the negative percentages. So yeah, so that to me is a successful back test. That's how long did it take us? How long far did we go back? We went back a month or so, didn't we, on the 10-minute chart, and a 17% profit, 17% gain. So yeah, so hope that video wasn't too boring having to sit waiting for me doing the calculations, but I mean it shows you how obviously how with the trading bot and the indicator how the trade actually does pan out. So I thought it was interesting to go through it that way. Like I said, you can't just do a back test through TradingView because you're not going to have those trailing profits and trailing stops that are gonna you have to factor in, which are obviously usually do help maximize your profits and minimize your losses. So, but yeah, thanks for listening to that video, guys. Yeah, any other questions or anything? Yeah, give me a shout in the comments. And again, as usual, this is not financial advice. I'm not a financial advisor. This is just for educational purposes. Trading is risky. Don't risk any more money than you can afford to lose or lose sleep over. And yeah, I look forward to seeing you guys in the next video.